Thanks for that, Kate. It's a real pleasure to present, I think, for our second year up at Brisbane here and tell the Legacy Minerals story. We're really excited about the year ahead for Legacy. We're closing in, as you can see on the slides, on what we think is potentially some big discoveries in New South Wales. This slide deck is up online on the ASX as well to refer in greater leisure. To give an introduction to Legacy, though, we're now the largest ASX-listed exploration company in New South Wales by tenure. Our key focus projects include our 100% owned Drake, Thompson and Black Range projects. And as Kate was mentioned, we've underpinned our portfolio with a bit of a hybrid discovery approach in these joint venture partners. So 4 joint venture projects, including with Newmont and the Mark Bennett-led S2 resources, as well as Earth AI. We're in New South Wales and we're focused on that jurisdiction, and the reason why we're there is it's a mineral endowment, home to Australia's biggest gold mine and a globally significant producer at Cadia. And that recognition of the terrain as being prospective and underexplored is really witnessed by some significant M&A activity recently, and a real global hotspot for exploration joint ventures at our end of the spectrum. In terms of us at a glance, that's our share price since IPO in 2021. We've kept quite a tight share capital structure, recently raised money, so we're well funded for the next stage of works and those discovery catalysts. Again, the exploration potential and the prospectivity is underpinned a lot by the partnerships and the recognition of our projects as well. And we've got a very robust board and management team. Dr. David Carlin, ex-chairman of Rex Minerals, Doug Menzies and Tom Wall, and most recently we appointed Dr. John Greedfield, who was the ex-principal geologist for Newmont, as well as the director of the Geological Survey of New South Wales. So we've got a great breadth of corporate expertise and geological capability in the team. So the first project I'm going to run through in a bit of detail is Drake. And what we really see up there is a brownfields site that has the potential to host a multi-million ounce system. So when we talk about an old mining jurisdiction, they were mining gold at Drake 2 years after Ophir was discovered in 1853 up until 1990. So you're talking about one of the longest continually mined districts in Australia. We're looking up there for a Porgera-style big Pacific Rim multi-million ounce system. And it's one of the largest mineral systems in New South Wales, covering 160 square kilometres. What we see up there, widespread high-grade drill hits in both gold, silver and copper. So we're talking 12 metres at 48 grams gold, 2,500 silver from 16 metres. Bigger hits, 118 metres at 1.7 from 2 metres, and some pretty fantastic untested or unfollowed up copper hits, including 16 metres at 5.8% from 58 metres in the same hole, 10 at 7. So we're looking at a very heavily endowed region up here. It's got an existing 2004/2012 JORC resource. We're in the process of updating that, and we're hoping to release that to the market next week. We like the brownfield site in which it sits, because we've inherited, roughly 50 million in previous exploration expenditure, and again sunk capital in around 30 million in site infrastructure. We currently have an assessment lease application on the project, and that's a bit of a bridge between an exploration licence and a mining licence. But it really just underpins, this is a viable place that should we make a big brownfields discovery or increase that MRE, that you're looking at a project that has a good future ahead of it. The New England Fold Belt, most of the Queenslanders would be very familiar with it, but you're talking some big mines, including Mount Morgan at over 8 million ounces. So we sort of see that the Drake, this rich discovery opportunity, we see prolific amount of historical workings, almost close to 4,000 shafts, adits, trenches, open pits across the area. And this large number of 100 gram metre gold hits is important in demonstrating the tier 1 potential of these types of systems. Most of the drilling in the area has historically been focused around the Mount Carrington area. So we really see that as an opportunity for us to make a discovery for our shareholders, is stepping back, looking at the big picture. These types of systems and these types of discoveries, recently over in PNG, K92 found, a plus 10 million ounce porphyry sitting off to the side of a low sulfidation epithermal system that we're considered to be analogous to what we're looking at here at Drake. So we're deploying the same geophysical team that led to a lot of the exploration success up there currently at Drake, with an airborne MT survey that's currently underway. So then to talk about the brownfields opportunity, there was a historic PFS done in 2017. Again, we're focused as an exploration company in growing the MRE of this project, growing the mineral resource, but it does sort of underpin that even at a $3,000 Aussie gold price when that PFS was done, that this has some pretty robust mining metrics and financial parameters around the production. Again, importantly, focusing on a low all-in sustaining cost as well. We also see in that PFS, even back then it was only done on less than 25% of the existing resource. So we see upside not only in the exploration potential, but upside in the mineral resource and upside in any future PFS that we do on the project. So on to our second project. It's a bit of a different proposition in terms of what we're looking for here, but Thomson is a large belt scale project, rare to be held by a junior company with a market cap like us, over 5,000 square kilometres. And what we're looking for up there is, we've pegged this position in what Geoscience Australia considered to be the most underexplored geological origin. Only been one company previously that's drilled up there. We're looking for intrusion-related gold and copper systems. That drilling was done pre the discovery of Hemi, pre the discovery of Winu, and pre the discovery of some other significant intrusion-related deposits in Australia, over the last several years. So that great analogue is the Greatland Gold Newcrest project, which was Havieron there. Nice intrusion-related gold discovery, I think around 8 million ounces equivalent. It's important to point out that the geophysical characteristics there, these large magnetic bodies and the coincident sort of gravity feature that sits offset to that. So we see the same sort of bullseye features that we do with our targets at Thomson, these metasedimentary host rocks, the pyrrhotite-related mineralisation, and these related gravity high anomalies. We're funded to drill some of these targets here, and Cut B is one of them. We've recently completed the gravity and geophysics over there, and A&T is the technology with a new shareholder fleet. And you can sort of see the side-by-side what that looks like. This project was drilled in 2011, targeting the magnetic anomaly. Offset from the magnetic anomaly remains the undrilled gravity high. So that gravity high was the key part in the discovery for Greatland Gold that really drove the growth of that company to its eventual acquisition of the project back from Newcrest. Another great target that we really like up at the project there is the F4 anomaly. Again, an undrilled anomaly, sits close to surface, so it's an achievable drill target for a company of our sort of size. What we see there is these three steeply plunging magnetic bodies that are very discrete, very suggestive of intrusives. And what makes this project really quite exciting is that historical drilling, intercepted mineralisation. So they were getting gold, they were getting silver, they were getting bismuth, moly, all the right pathfinders that indicate that there is, this system is fertile, it's pregnant, the intrusives are there and they're mineralised, but they have yet to be discovered. So I'll race through the joint venture projects. They're not an insignificant part of the Legacy Minerals portfolio. And what we see as really key in this, as any explorer, to deliver your shareholder returns, as an exploration company is making those discoveries. And JVs are a great way to secure non-dilutive expenditure on our project and expose ourselves to as many discoveries as possible. There's a few graphs there of what a discovery can mean for a small part of the partner, and Greatland Gold's share price graph is there. So more than 10 bagged off a 25% ownership of a project with Newcrest to over a £1.4 billion market cap. So we're really trying to get one of these projects to deliver that sort of same success for us at Legacy Minerals. And the first project that I'll talk through is Fontenoy. A bit like the horse at the horses, this is a bit of a dark horse in our portfolio. It's a PGE type system. They drilled 3 holes last year, confirmed what was previously unrecognised to be a magmatic nickel-copper system in New South Wales. There was a LinkedIn post that sort of alerted us maybe to the significance of that, 120 metres at 0.3, but that was the best greenfields PGE drill hit in Australia last year. So we're a gold-copper focused company, and certainly PGEs aren't our forte. We re-signed our alliance agreement with Earth AI that sees us loan carried through to 20% commercial production. Off the back of that discovery, Earth AI raised $20 million at the beginning of this year, and they're going to be aggressively drilling that out. The earn-in structure we see as critical, for us, is that it allows us to maintain significant ownerships of these projects, and again have a loan carried through to commercial production. And what that sort of means in a practical sense is that at the completion of the JV, the other party spends the subsequent money on further exploration drilling, resource definition, studies, all the way through to CapEx to put a mine into production. So the same deal terms apply with our Glenlogan joint venture. This is a really exciting project, and there's some work that the S2 team are doing currently at the moment, which is some ground geophysics. But we pegged this ground at the end of 2023, and within 3 months we had a deal done with Mark Bennett and the S2 Resources team. So under the same terms that we have our earnings with both Newmont and Earth AI, 20% free carried through to loan carried through to commercial production. What's really exciting about this project is that we're 50k south of Cadia. There was a single drill hole that was drilled middle of last year for 1.4 kilometres. It explained what that magnetic intrusion was, but towards the end of the hole, they started to see an increase in pyrite mineralisation and alteration, as well as chalcopyrite. So indications that there's potentially a nearby fertile porphyry intrusive that's yet to be discovered by drill testing. The market was pretty harsh in their response to that result, but from a technical perspective, that's a really, really encouraging start. We know that area to be highly prospective. Goldfields signed a $70 million joint venture probably about 3 months ago next door to us there. And there's been some prolific exploration activities being undertaken by them as well as others in the nearby area. So again, we're speaking about a never before recognised Ordovician intrusive complex, so same age rock sequence as Cadia Ridgeway, 50 kilometres to the north, 50 million ounce, 10 million tonnes copper, that hasn't been drill tested. So we're expecting some of the results from those geophysics to be imminent from S2 Resources' earlier releases on what they were planning to do there. So on to the last joint venture in the portfolio, which is our JV with Newmont. This project was pegged by us as free ground. Most of the projects in the Legacy Minerals portfolio were. And quite quickly we started to realise that this was a pretty special project. We IPO'd with it, we started to drill it, and we started to really realise that what we're looking at here is a globally significant epithermal vein field from the surface expression. So some fantastic rock textures, really high grades and extensive strike length. Newmont came down and did that deal with us to sort of emphasise, I guess, the technical importance of the work that our team has done and what it means for the geological prospectivity. Newmont have done 2 transactions in Australia in the last 4 years, or since 2021, and that's the acquisition of Newcrest and this joint venture with Legacy Minerals. So they're looking for tier 1 epithermal systems, low sulphidation epithermal systems, targeting 500,000 ounce per annum 10-year mine life production. That's the sort of get out of bed figure that a major wants to sort of see in a project. We're at the very early stage in this project, so it's a relatively greenfields opportunity, but we are seeing highly encouraging indicators at surface, as well as some pretty significant grades as well. So it's, again, like Drake, a very polymetallic system with some historical sampling there going as high as 3,700 grams silver, 6 grams gold, and greater than 55% lead zinc. So a very mineralised area. So to sort of wrap it up, we've got some pretty big targets. We're deploying new ideas in the way we're thinking about them, as well as new technology, and really a discovery-ready portfolio. We've got a stack of catalysts for February, March, and I think drill assays pending from 4 projects to come in, should the labs play game. But it's going to be a very exciting time, and I welcome everyone to come have a chat to us at the booth next door. Thanks for your time.